Hello guys. So there's this pair here that I'm looking at, which is the USD JPY, and fundamentally, I'm not seeing some changes here in terms of institutional positions, and probably maybe this week we might get a small sell, uh, a small sell. So basically, for the USD JPY to buy, we need a strong, sorry, we need a strong yen for the USD JPY to go up. No, not to go up, actually for it to sell. For USD JPY to buy, we need a weak Japanese yen, and for it to sell, we need a strong Japanese yen in this case. Because most of the time when these institutions are submitting their contracts, they're already trading against the dollar. So in this case, we just look at the Japanese yen institutional chart. So in this case, let's come here, bring in the yen here. And now this yen, we want to look at the retailers' behavior in this case, and we can see this is the non-reportable group, and we can see according to the previous behavior, they have been heavily shorting this pair since 2025 April. They've been selling it heavily for almost a period of 1 year. So you can see if they have been doing this, we know very well that according to their characteristics, every time they short the market heavily because they follow the trend, we expect reversal patterns to happen. That's why you see everywhere we have a bottom, these spikes to the downside, you'll see that the market attempted to do it, to reverse to the upside. Reverse to the upside, as you can see, we get a sharp bottom here. You can see even here, first took some time and went up. We can go all the way. Look at these sharp spikes to the downside. These are the retail behavior. And this is what they do. Most of the time when they get more bearish like that, we get to see the market pushing to the upside. But this is not enough. Let's just start discuss a little bit behavior of these guys, of these retailers in this case. We can see that in the last, we look back in the last 1 year, retailers in this case, they're extremely bearish because they have been on this low, right on this low here. So if I look back and be able to see that, oh, these guys have been bearish since 2025 April, and right now they are touching the bottom, so expect the market to reverse. This is according to the retailers. But now if you look at the other group, which is the non-commercial, which is the commercials now, institutions, you can see the institutions is doing the opposite. From their, look at them, they're extremely bullish. At least they're touching almost 100% in the last 1 year, 100%. So this means that institutions are heavily long, and to put everything together, like you can say, put everything together like this, you can see this time commercials are here. Commercials are here. Where is it? Where's this tool? Here they're getting more bullish. Retailers in the middle, and the fund managers there. And the fund managers, if you look at them, they are curving to the upside, which shows you that's a confirmation of the market trying to rally. So every time we get this shape, like commercials going long, look at this, we get those push to the upside. Look at that spike. Look at this spike. Every time we have the institutions going long, such spikes do take place. Right there, you can see. So we can see here, the commercials are heavily long in this case, and I'll just want to really look for long positions. But in terms of the index, positioning. On the index positioning here, we will look at this using this just 6 month. 6 month, see retailers are trying to get more bullish again here, but you can go a little bit higher and look back at least 1 year. This like 6 month. Can look back 1 year. Because you look back 1 year, you see commercials are heavily long in this case. Go back at least 2 years. 2 years. And you see on 2 years, commercials are trying to get long. So of course you can just use 1 year for now. 1 year is enough. 1 year is enough. So if you look at using 1 year, see every time commercials are bullish like that, we expect to get the rally there. Again, here you can see when they were bullish, you got at least 2 weekly bullish candle there. Here, look at that. See here, where else were commercials bullish here? Bullish retailers down here, you got that spike. And here as well here. So in this case, you can easily see commercials long, and the yen has been rising. So here we're looking for a long yen again. So that one is what I see on the yen. And now when I look at the valuation of the yen here in this case, the valuation of the yen, we see the yen is not, we need the yen to be undervalued. So long term, actually, it's not undervalued. We need it at the bottom here. So we can just look a little bit long-term valuation of the last 30 days, value of the yen against the dollar, the dollar in this case. You can see you're undervalued. And the moment you're undervalued, mostly backtest, let's hide the market, and you see that every time we undervalued, what happens here? Every time we undervalued, expect this market to really try to push higher. It's undervalued here, undervalued here, undervalued here, undervalued here. And let me bring in something more. Gold. Okay, here you can see are undervalued both on the dollar and gold here. One more, maybe here, undervalued was dollar and gold, here only gold, and here the dollar. So if you're bringing the market, you can see every time we were undervalued, the market used to pump higher. The market used to pump higher when it was undervalued, 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 undervalued. You can see that. You can see even here, we were undervalued here. Got those rallies to the upside. Those rallies to the upside. Here, here, here. Even here, we were undervalued. So you get the rally. So looking at the current price, we undervalued here, so you got this rally, and here we undervalued again, and you're likely to get another rally. So that's another thing that is aligning the fundamentals. Then lastly, I want to take you to the seasonality tendency, sort of that seasonality of the yen. Now we have at least 2 things aligning: fundamentals, valuations, and now third, we're going to look at the seasonality as well. The seasonality of this Japanese yen. So allow me to quickly do this here. Now, we look at the seasonality of Japanese yen. Seasonality of the Japanese yen. Here, look back, I like 2 years and 5 years. So we want the yen to fall. Now look at this. I mean to rally, to go up according to fundamentals. You can see the yen has a small drop, maybe 1 day left. because you can see beginning of April, the yen is expected a focus to go a little bit higher before the fall. That's according to 2 years focus. You can see here again, we expect the yen to rally. There's another confirmation. Go to 10 years, not looking good. Go to 15 years, we expect the rally. That one is very nice. Probably 20 years or to look for the rally. So in this case, we are looking for a strong yen, Japanese yen. And if the yen has to go up, then in this case, I want to see the dollar dropping. So here I can just quickly flip into the dollar side and flip into the dollar side, because also I want to have the dollar dropping for, I need a weak dollar for the Usdjpy to drop well. We need the dollar to be very weak. So in this case, the dollar seems like it's gonna push a little bit higher, not looking good on the dollar. The dollar is not aligning with our idea. Okay, not good. So anyway, at least on the yen side, things are okay. Things are already okay. So technically now, let's look at the Japanese yen. We know that technically, according to the trend, the yen has been very, very bearish the last so many days. The yen has been very, very bearish. But now, since we're looking for to buy the yen, we need a demand, which is this one. We need this demand to see the yen is already on that demand. Though we can refine it on a daily time frame. We go to the daily time frame, we refine it, let's see, this will get our demand. Now, if we got this demand here, the demand is not yet touched. You can see there's an institutional gap. If you know, opening and closing of the market, you see this candle was red. The next green candle was supposed to open here, but it jumped and it opened somewhere there. So this market also, it has been having an institutional gap. Something like this, a gap here, which has, I see it has been filled. Price has filled the gap, but not yet touched our demand. The demand is still fresh, so still I'm looking forward for the yen to drop into this demand and rally to the upside. If the yen is gonna drop to this demand before it rallies here, so that the USDJPY will get a sell, I just want to click also on the dollar as well to see what I'm expecting. I need a weak dollar in this case. I'll need a weak dollar. So here I'll just go all the way to the index. Very quick look at this here, and to see the dollar is down here. And if the dollar is down here, this is good. The dollar is gonna fall probably from this particular supply, from maybe this one, but mostly let's focus on this particular supply. So the dollar is gonna push a little bit higher before the drop. And if you look at the seasonality tendency, it shows you that the dollar, okay, let's look at the 2 years. You see the dollar still gonna push a little bit higher before the drop. And even if you look at the 2 years time, dollar gonna go up a little bit before the drop. So here the dollar maybe still has a small room to go into that weekly supply before the fall. So if we have that, then we have a bearish buyers on the USDJPY. So let's look at the USDJPY here. Now, if we got the big time frame, in this case, 12-month chart, you see the supply is very far, but we're looking for a correctional phase. We need a nearby supply. So in terms of the trend, the USDJPY big time, it's been dropping. And right now, this looks like a correctional phase. And go to 3-month time frame, and we're looking for a supply. I'm more interested to work with the supply zone. So in a 3-month time frame, I see this at old supply that is here, old supply level. This is an old supply. Can later refine it, refine this supply well. From monthly time frame. So if you look at this one, so we can refine it all the way to that high, to the basin. So if we hit this supply, because it's a strong pivot, maybe we might expect the price to go lower. Now you can see this supply was hit and price dropped. So there's one thing that's likely to happen here. According to the monthly time frame, price can easily go all the way to this high. If we get a drop, but when I look at a lot of things aligning with the yen might drop before even hitting this area. Because currently, look where it is. This was a very small touch and a very quick reversal, but look at this monthly time frame. So let's drop on the weekly chart. And if you look at the weekly time frame, we have this nearby supply. Rally base drop. This one is a weekly supply, so I'm gonna fade the line above. And I'm gonna pick this one. Now we have this weekly supply that is here. Can pay much attention on this one. And the price, you see it has just touched this weekly supply and already it's reversing from there. But I don't want to trade this area. I want to refine the weekly supply a little bit into the daily time frame. So here we can go all the way to this high. Because remember the Japanese yen also, it has a demand that is still fresh and touched. So we can mark our pivot like that. This becomes our daily rally based drop supply. So here I'll expect the yen to go a little bit higher into this area before I get a proper reversal from that area, right? So if you're looking at this, let's see. Now this means that for the Usdjpy to drop well, we need the yen, right? The Japanese yen, for institutions to start offloading their short positions and to start adding in long positions. They have to start buying the yen and closing their shorts. And that means that if they do so, they'll be selling the USD and they'll be buying the Japanese yen. So here, let's conclude this with this small information here from the website to see if these guys are closing their short positions and opening long or not, because we need them. Like for this Japanese yen to drop very well, institutions have to start closing their sales to float sell and to start opening long positions in this case. So let's try to see what we have here. Just a second. Let it load up. Let it load up. Let it load up. Now, where's the Japanese yen? I want to go to the column of the Japanese yen. Yen is, okay, the yen is here. You can see, look at the Japanese yen. This is the column of the yen. You see they have, okay, they have not yet started closing their okay, the net change. The net change here, they have increased by 4K. This means that long positions have increased because you can see the changes. This means that this net change minus this net position minus the previous net position, we get 4,974. At least longs have come in, but on the recent report, long positions they have closed. We want to see them adding longs, not closing. So here they have closed longs 8,548, and also they have closed shorts. But we can learn something from this data. They have closed more shorts than longs. So this means that the market is entering what we call accumulational phase, whereby institutions are closing shorts and starting to open longs. So in this case, we're looking forward to get what? To get an increase in long positions and a decrease in short positions, probably on the next report. That's something that I'll want to see. But if I look at the detailed report here, and I look at the detailed report on the yen, I see these guys have offloaded their short position. You can see, we can see, look at this, they have offloaded, because look at this, the previous, they were having negative 41 short position, they increased to 67, submitting their lowest short, I mean the highest short contract in the last 1 year, but they have offloaded. from 67 to 62. So already the yen is very strong right now. So that one to me is a confirmation of of how this market's gonna move. So let's see if the Japanese yen will really push into this particular supply. This quick sell here, I'm not really confident because it's a weekly, it's selling immediately from that weekly supply. Though I want to trade the daily supply that's inside the weekly. Look at this. This like the entire supply here. The one inside, you can make it green. The wider version is here. So you see it's working from that wider version. For high probability, we'll want to trade the one that's inside the daily. So let's see how this day is gonna end. Otherwise, guys, have a great day.